Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, January 31st, 5 o'clock Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Much better picture to report today versus yesterday. Let's get right into it. State of the market uptrend, caution. Let's see the reaction to the Fed FOMC interest rate announcement tomorrow, their commentary, and then Amazon, Apple, and Google earnings after hours on Thursday. We should have some clarity Friday and early next week on what the market wants to do. Check over here the trend gauge. Leaders acting fine, flashing bullish. And then, of course, all three timeframes that we track for the five major moving averages, all five above their short-term 21-day exponential moving average, above their medium-term 50-day moving average, and now again above their long-term 200-day moving average as the NASDAQ 100 broke below yesterday, regained it today. We're at neutral here because we need the slopes of the lines all pointing higher to get to a full bullish mode. So what happened today? Bizarro Green Day, Fed on deck tomorrow. If you're not familiar with the Bizarro reference, you got to watch the Seinfeld Bizarro Jerry uh, episode. Jerry's a big Superman fan. I don't know anything about Superman. I've never read a comic book in my life other than watching the show on TV when I was a kid. But apparently, Bizarro World in the comic books is the direct opposite of the planet Earth, and everybody in there is a mirror image of people on Earth, but they act in a completely opposite way. So Bizarro Green Day, meaning yesterday leaders were bad, today they were very strong. Yesterday the market sucked; it was down, uh, very red. Today, very green. So Bizarro Green Day, complete opposite of yesterday. Uh, let's go through the numbers. 21 over 21 list up an average of 3.1%. That's how we know. Leaders acted well as the G6 up 2.3%. This is our 6 ETF growth proxy that we track in-house. S&P 500 up 1.46%, NASDAQ 100 up 1.5, Dow up 1.1, mid caps up 2.4, Russell 2000 small caps up 2.45, global diversified 60/40 stock and bond up 0.79. GROTECTION in-house up 1.61%. Good way to close the month. We did get the January trifecta, which is a positive Santa Claus rally, a positive first 5 days in January, and a positive close to January. I believe never in history before when that's happened have we finished with a negative year in the market. I think it's the number of occurrences is only 18, if I remember what I read correctly. I'll update that if that's incorrect, but better than a sharp stick in the eye. Let's say it that way. Let's see if Jerome Powell ruins the party tomorrow or if he gives the market enough confidence. And then if earnings continue to give the market enough confidence to let this rally continue. So let's get right into it. If you're new, what we do at Revere, active management. When the markets are trending higher above all three time frames that we track, we are as committed to the market as we are comfortable enough being. When things start going south like they did a year ago in January, when we start breaking below these moving averages, we start lightening up in the market. If we break below this big nasty black line, that is the 200-day moving average, our long-term trend line. All bear markets occur under the 200-day moving average. If you can avoid those, get out of the way. You can breathe a lot easier, preserve a lot of mental and emotional and currency capital. And that's what we do here at Revere. Our number one job is protecting the downside. The upside takes care of itself when the market gets back to a healthy posture. And if you're interested in an approach like this, shoot me an email, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or call us at 855-REAL-WEALTH. That's 855-732-5932. So for the third time in the last 2 weeks, The market has had a attempt to scare you out and then make a higher high each time. Let's start with, let's go back here. We'll do the daily first of all. We regained the moving averages. We got back above the 200-day moving average. Then on the 18th, we had a big negative reversal. A lower low the next day took us below all the moving averages and then reclaimed it the next 2 days. Inside day the following day, big gap down on the 25th, but we recovered, closed at the highs, made two higher highs. Rough day yesterday, leaders hit, all the indexes hit off the highs. The word on the street was everybody's preparing to get out of the way because the Fed's going to blow the market apart. Well, that was completely undone by Bizarro Tuesday today. So for the third time, starting with the 18th, you can see here, here's the hard sell-off, the next lower low, 2 days up to make new highs. Here's the gap down on the 25th, close at the highs, make two higher highs. Here's the bad day yesterday, gap down, finish at the lows, and here's the complete opposite day today. So 3 times the market will try to separate you from your capital, wear you out or scare you out. Every one of these 3 days was a challenge, but every one held the support where it needed to on the S&P. And I went in detail yesterday for how the indexes and everything that we were holding. It was just a normal pullback, although it really didn't feel that way. It felt a little more severe and like you'd want to take decisive action. But in this case, um, we didn't get shaken out of anything. In fact, we added some stuff yesterday and that came to fruition today. NASDAQ 100 bounce at the 8, reclaiming the 200-day moving average today. Good stuff there. Also, the stochastics have gone from neutral to, this one is still neutral, tried to cross, but now it's going sideways. 4 of the 5 hooked back up today. Let's check out the S&P 500. You can see hook down here, hook back up today. Let's go to the Dow. Dow up 1.1% today. You can see it really, it hooked down, but it never crossed below the moving average. So the Dow bounced perfectly at the 50-day moving average, and the 21 and the 8 is mixed in there, also reclaiming the 34,000 line. Let's go to mid caps. MDY, strong day today there. Hook down, hook back up on the stochastic, bounce at the 8, make a higher high. Good stuff there. Relative strength also relative strength in the small caps today. Bounce at the 8, make a higher high. Stochastic down yesterday, back up today. So good stuff there across the indexes. Let's go to some other important things that we track, starting with the dollar. Negative correlation for the dollar. Geez, UUP. The negative correlation for the dollar remains in effect. Let's see how this acted today. Started out strong. This was a brief pullback or consolidation in the morning while it did it, and then the dollar started selling off, and this coincided with the market shooting higher. So that inverse correlation still in effect. The VIX making an outside negative reversal, which is good. As you know, VIX also works counter to what the markets are doing, holding that declining 21-day moving average and the declining 50-day moving average. Equal weighted indexes, RSP up 1.7% today versus 1.46, so some outperformance there, and breaking out of this cup and handle for actually this will be the third day with an attempted breakout of this cup and handle. QQEW, equal weighted NASDAQ 100, bounced at the 80 EMA, up 1.4% today, basically in line with the NASDAQ 100. Let's flip to bonds. BND, across the board, bond ETF prices were up, which means rates were down. Here you can see BND reclaiming the 200-day moving average. LQD is corporate bonds. Still tight, but bouncing off that 110 area. JNK is junk bonds. Really similar setup to corporate bonds bouncing at that 200 there. TLT is the long-term 30-year bouncing off the 21-day. With these prices being up, that means the yields should be down. Let's go to the 10-year first. There's your lower yield, poked its head above the declining 21-day yesterday, back below it today. Here's the 30-year TYX, actually showing barely up. Remember, these things close at 3 o'clock, so that last hour could dictate the difference, but still below the declining 50-day moving average. A move back above there or sustained above the 21 would be a change in character for bonds. How about gold? Gold up today with the weaker dollar, was weak early, gathered strength during the day. Very tight action in gold here. Gold stocks, GDX, underperformed, but bounced at the 21-day moving average. We have a position in this, and SLV, uh, outside positive reversal back above the 21, up 0.78% on the day. And finally, Bitcoin BITO, up 2%, still hanging out in this tight range since that big move up that it had a couple of weeks ago, hanging very tight there. Let's set an alert at 15 to make sure I don't miss that. This is not something I track very closely, but it's a lot of people ask about it, so we do it. So those are the major indexes that we track. Let's get on to the tail of the tape and then the stocks of interest today. So I talked about the caution being there at least through the end of the week, although we're acting pretty well. The bull case, like I said, like I detailed at the open, 3 attempts to break the bull over the last 2 weeks all have failed and resulted in higher highs. Now we'll see what Jerome Powell and the FOMC bring tomorrow. The reaction is more important to than what they say. Let's hope they're consistent between the statement that they put out and the Q&A that he does. Some news, and this really sparked the market. Futures were down pre-market. You know that the Fed is wary about stopping raising rates if employment stays strong, but the employment cost index came out. This is something they've noticed that they watch, and it showed wage inflation slowing, and that really turned the futures from negative to positive and lit the candle on the rocket for the big update that we had today. So any good news about wage inflation slowing is being interpreted positively by the market. Day count from down 1 to up 1, now the 8th day above the 8 EMA and the 21 EMA. Yesterday was a neutral day, but if we bounce off the neutral, this was showing 0 yesterday, and regain the uptrend, those are the way I set the rules for it. So 8 days above, 17 days since the 1/6 follow-through day. Expectations coming into today positive. As long as we held 4,780-degree turn, that's your Bizarro definition from yesterday, regaining support and resistance 2 level of 4040 on the S&P, and support and resistance 2 level of 292. That's the 200-day moving average on the NASDAQ 100. Here's the action today. Big squeeze into the close after just trending higher and higher little by little yesterday. Complete opposite, or today, complete opposite of yesterday. It was kind of weird to watch how the market can be so different, but it's really not a surprise. 11 out of 11 sectors positive, led by home builders. We're going to take a look at a home builder chart that gapped up today. KBE, banks, biotech, IYT, led by another gap up in on earnings, and retail. On the downside, bond yields, KWEB, that's the China web ETF, and emerging markets. Here's our focus list. The only thing we did in-house was buy TMDX after a harsh pullback yesterday on this of 9%, and a perfect bounce today off the 50-day moving average and a reclaim of the 21. We bought a small position in this. The story is fantastic, and we want to be involved. It's a little on the thin side, so it's a very small position. But if this grows into a leader, we want to be in on the ground floor. the only trade of the day, so that upped our adjusted beta from 1.08 to 1.1, actually a little higher today with the gains. By the end of the day, we'll reduce our cash position and raise the percent that we're in the market. Bottom line, Bizarro green day with leaders, Nasdaq 100 back over the 200-day moving average, and the Fed on deck. So let's get to the focus list now, which comprises everything that we own in the portfolio, as well as a couple of notable names. So let's start with, you already saw TMDX. Let's go to the 3 ETFs that we own. XBI, nice day today, up 2.1%, holding above the 50-day moving average as it really puts in a little flag since this attempted move up 2 weeks ago. Second one is OIH. Oil services have been stronger than oil stocks. Bounced at the ADMA, continue to act well, up 2.1% today. And finally, GDX, gold stocks, not showing any relative strength over the last week, but bounced where it needed to at the 50-day moving average, and volume really drying up. This might run tomorrow after the Fed, or break down, in which case we'll sell it. Now the holdings. Boeing, our largest position, on individual stocks up 1.6% today. Nice action there. Would like to see a little more volume. First Solar, 4% today, reclaiming yesterday's losses. Shopify, a lot of these we would have added to today had tomorrow not been the Fed day, but with a 1.1 exposure to the market, that's 10% higher than the S&P. We're conservatively aggressive at Revere here, and we know when to be on the conservative side of that aggressiveness. And before a binary event is one of them. Shopify up 4.4%. Nice day today. Tesla shook off early weakness, made a lower low versus yesterday, but up 4% on the day. This is how leaders should act, and this is how we generate alpha in a up market. Dutch Brothers up 4% today. When the market's up 2%, you should see the leaders up 4%. We have the 60/40 portfolio. We're at 60% in ETFs that basically track the equivalent of the S&P 500. The rest of the portfolio is in T-bills and leading stocks, and the leading stocks generate the alpha, while the 60% equivalent is the equivalent of 60% in the S&P 500 in a 60/40 portfolio, and then it's the being in the leading stocks that generates the alpha. Bros. Next up is AEHR. Undercut the 8, reclaimed it today. Good stuff there. 34 was the key level there, and it held it. AI, this was a beast today. Up 22%. They released a new platform, and the market apparently liked it. 2,300% above average volume, up 22%. Would like to have a bigger position, but like I said, we're conservatively aggressive. And TMDX, already mentioned that. So let's go through some stocks of note today with earnings. Start with Pulte Homes, big gap up 9.4%. And isn't it amazing how these stocks have been outperforming while everybody talking about rates rising and nobody can get into a house now, and the market looks 6 months down the road, and that's why these things have been outperforming. Pulte, a big gap up back in November, following it with a big gap up on earnings today, and good stuff there from Pulte. Former leader Spotify trying to regain its leadership, up 13% today on 460% volume on earnings. ALGM, semiconductors, will lead if the market leads. This is a leading candle today, up 11% on 400% above average volume. Allegro Microsystems, a bit on the thin side. GEHC on the downside, down 2.7% today, following up from its earnings report yesterday, sitting right on the ADMA. This is traded for 19 days. The 19-day exponential moving average is around 65. So a little extended. It's something that we want to get into, but we wanted to catch up closer to the 21 day before taking a position. Caterpillar reported earnings, and that's not the reaction you want to see, although it did finish mid-range today, down 3.5% on 272% above average volume. And UPS, the economy's going to crap, but UPS, what they're reporting and what they're seeing isn't. Is the economy really going to crap? Are we really going to a severe recession? This tells me no, up 4.7% on double plus average volume. Good stuff here from UPS. And after hours, AMD reported. We need this to get back above the 200-day moving average. Went out at 75. It's trading at 77.26, so up about 4%. After hours, 79.46 is where the 200-day moving average is. So good reaction to AMD should help semiconductors tomorrow. And that's going to wrap it. As always, like to hear from you. Emails don@revereasset.com. If you're interested in being a client, email my partner, Dan Stewart, dan@revereasset.com, or call us 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. And with that, I will wrap up the month of January 31st. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening. Have a great day.